Hello, listeners, and welcome to another episode of Cognitive Dissidence. As usual, I'm your host. I'm Jacob Shapiro. I'm a partner and the director of geopolitical analysis at Cognitive Investments. Rob and I are back at it for our weekly chat. Rob is in the midst of earnings season. I've been on the road, feels like every week this year. So far, I was in Miami earlier this week, so we're getting this to you a day late. A lot of open questions in this episode. We don't have a lot of answers, but a lot of questions about things that are happening geopolitically. So as always, we hope you enjoy it. And as always, please email me at jacob@cognitive.investments if you want to learn more about our wealth management services or about our research services or about booking me for a speaking engagement. Okay, take good care. See you out there. Before we get there, why don't we start just looking at the U.S. economy, because it's sort of it still is the center of everything that's going on, and then we're going to hop around because it's been a very, very busy week geopolitically. Rob, I'm having trouble sort of understanding, and I always have trouble understanding how the financial media is reporting things, because everybody seems to be reporting that interest rate cuts are imminent, that the Fed it wants to cut, that it's on the table, and I can't square that with the economy is doing great. And inflation, yes, it's not what it was, but it's still, it ticked up 0.3% last month. So it's not like it's going down in any meaningful way. And energy has been very suppressed. So the big news of the week was, Jerome Powell basically took rate cuts off the table in March. But as I joked with you, I didn't know rate cuts were on the table in March. And every headline I see that, inflation cools, or this data indicator will give the Fed space, I just can't make sense of it. So maybe you can help us make sense of it, and also help us make sense of, as recently as September, October, the stock market was in a nosedive and everything was terrible and nothing was good at all. So how are you making sense of this? Because it's honestly been befuddling for me the last couple of weeks.
It is befuddling for a lot of people because, like we say often here, financial markets are sort of like two mirrors pointed at each other, and they go, off into infinity. And that's sort of the dynamic that you have here, because the issue is, if you look at the backward data on inflation, things look okay, as you point out. And a lot of people in financial markets and on the Fed board are saying, hey, we're at our target, or we're near our target. And so the issue is, even though Jerome Powell has said, we don't want to be too hasty, we don't want to do this too quickly, it's better to be, too restrictive for too long than the opposite, markets don't believe him. Most people don't believe what he says. They're looking at the data that's come in, they're looking at this slowdown in inflation, and they're assuming that he is just wrong or stupid, like Fed chairmen and central bankers have been shown to be in the past. Heading into lots of recessions, they've always said, well, let's not be hasty. And then, oh no, let's be hasty now because we've made a mistake. And I think that's the dominant narrative. And if you read, on Twitter, I think I see a lot of people who are just hammering every day, like, employment and payrolls are cooling. Clearly, they're going to cut rates. Just cherry picking data points over and over. So I think that narrative has really come to dominate. And you can see today, even though that he said that on Wednesday, short-term rates are back to their lows. Like the 2-year Treasury yield is back to its lows. So the market wants to latch onto any sort of signs of weakness that it can, and it wants to prove to itself that Jay Powell is wrong. I think at CI, we don't agree with that. I think we've said many times, and it's still our view, that Jay Powell is looking into the future in a way that very few bureaucrats can, and he is a bureaucrat. Let's not get that wrong. And he's looking at sort of forward-looking indicators. And I think that's the only way that you can do this. So you asked what has changed between now and October, when things seem to be falling off a cliff in equity markets and otherwise. Well, what's changed is the U.S. consumer. Back in October or even September, expectations were that U.S. consumers were getting slammed and that we are probably going to see a lot of weakness. Our friend Chase, who's been on the podcast many times, and I think is a great analyst, like talks about the Reaper. Like there was this visceral fear that we were headed into a major slowdown, and what ended up happening is partly because inflation has come off the boil, the U.S. consumer has come rip roaring back again. And what you're seeing in equity markets, this is why it's so important to watch markets and how they behave. Look at all of the retail and restaurant stocks. They were in the dumps in October and have absolutely ripped in the several months since then, up 50, 60%. I mean, the gap is up 70%. Things are good when the gap is ripping the ball off, the cover off the ball, I should say. So I don't think anyone's bought anything there since 1998. So consumers are going to town, and all of the expectations for growth and for spending have risen. So in large part, you see markets that are reflecting a very much Goldilocks scenario right now, because the consensus view is, hey, growth is good. And also, hey, interest rates are going down. So it's no wonder that people are feeling frothy. I think our different variant viewpoint would be, hey, if times are good, interest rates are not going down. And you need to expect that what Jay Powell says is really what he means. There's a political element to this too, not to go on and on, with the upcoming election. Like, people forget Jay Powell and Trump butted heads enormously during his first administration. And I think there's some expectation that that's going to come into bear as well if Trump wins the election, or we even get close to the election. I don't believe that. I think Jay Powell is a guy who is going to do what he thinks is right, no matter what. He's too old and too rich and too principled to give a shit what most people think. I believe is my read. So I would zig on that one as well, where people are too focused on that.
Yeah, I mean, just a couple of data points that like seem to tell the story more to me than the headlines. I mean, like I said, the CPI was up 0.3% in December. It's 3.4% over the last 12 months. So that's not huge, but it's not nothing. And when you break it down, energy is driving it down. Energy's down 2% over the last 12 months. Food is up 2.7%. All items are 0.3, 0.4%. When you look at when you look at rent for primary residences, the U.S. city average is up 6.5% over the last 12 months. So people are paying a lot more where they live. And then you had a small jump in jobless claims in sort of the last 24 hours, which maybe helped, as you were sort of alluding to, drive the benchmark yields a little bit lower again, but they're still at historically low levels. So it's really hard to parse that data and think anything else. And the other part of this, and this gets into, as you were saying, politics and the election coming up. The U.S. electorate looks dissatisfied with the economy. So even as the U.S. consumer is spending the dollars and can't stop spending the dollars, everybody says that Biden is not managing the economy well, that Trump would manage the economy better. That's what most of the polling data suggests. And we've talked about that juxtaposition for a couple of podcasts now. And there's one study that I found, it's from the Carnegie Endowment, that I thought might be relevant because I'm looking for an answer for how the U.S. consumer could be doing so well and yet blames the Biden administration for a bad economy. Like, something there also doesn't line up. And I'll put a link to this study in the show notes, but it talks about this idea of quote unquote effective polarization. And the idea is not that Democrats and Republicans are ideologically polarized, it's that they're emotionally polarized, and that there's an increasing tendency of both sides to impute negative personal judgments against the other side. And the ironic thing about this, they're talking about this in the context of political polarization, is that even though ideologically Americans actually might have more in common with each other, because they're so emotionally polarized, they pick politicians who themselves are ideologically polarized, and then you get this sort of thing where in Congress they're yelling at each other and can't get any deals done. Whereas if it was the normal rank and file American, we probably would have had immigration reform and everything else sort of months ago. And I wonder if that has something to do with how people are thinking about the economy as well. But as you can tell, I'm grasping for straws. Every headline that says, ooh, this might give the Fed space to cut rates, I don't know, maybe I'll end up looking really stupid in 6 to 12 months. But it just, something is not quite adding up for me.
I don't think it's grasping at straws at all. And if you look at the survey data, it supports what you're saying, because people tend to cite the overall surveys of all consumers of how they feel about the economy, how they feel about, the forward outlook and inflation. But if you look at the survey data broken out by party affiliation, it absolutely flip-flops. So when Trump was in office, the economic sentiment of Republicans skyrocketed and Democrats actually fell a lot.
Yeah.
And then it went the other way when Biden came into office. So there's very much an emotional attachment at play. And I think from as far as practical implications for investors or just anyone, two things that I think are worrisome in that vein are just look at what's happened the last two presidential administrations, right? So if you're in a situation where everyone blames you for the economy, even if the economy is doing great, I think it increases the probability that you're going to give people bread and circuses of all kinds. So people look back at the Trump administration and say, hey, he really juiced the markets. That was great. Well, the reason why markets got juiced was because in the beginning of 2017, the corporate tax rate in the United States went from 30% to 21%. That is a huge, that was the biggest thing that's ever happened in my career as an equity analyst. Like, those have real implications for corporate cash flow, valuations, all of these things. And that led to the start of blowout. I mean, we had deficits before then, obviously, but that's when the deficits really started to get bad. And it's not, pointing at one side or the other, because then when Biden came into office, even after COVID was well into recovery, that's when we got the IRA pushed through. And that was basically of similar magnitude as far as deficit expansion. It was giving money away, a different form of trying to please the electorate, trying to juice things to get your political party some points. And the problem is, this is the hallmark that you see when things start to get out of control. And there's still an open question of, do you reach a point where, hey, X percentage or X billions of dollars per year are now being spent on debt service? Do we actually have someone come in and try to, take the punch bowl away in some form? Or is this dynamic such that it's just going to spiral farther and farther off the rails from a fiscal standpoint? I don't know the answer.
Well, and I think that's what bothers me so much about the coverage of interest rates. It's almost like we had super low interest rates since the 2008 financial crisis, and now people just assume that that's how it's supposed to be, that that's the normal. But that's not the normal. That was an aberration in response to a major crisis. But whether it's the millennials who think they're entitled to lower interest rates because everything else in their lives has sucked, and I'll raise my hand there and say, that's how we feel, guys. Or whether it's, I don't you sort of go on down the line, there's just this expectation that, yes, we have to get back to cutting rates, but I just don't see how that expectation is there. Anyway, we could drone on about that forever, but it's been a pretty important week geopolitically, and some of the things that have been going on, it's not wars, it's not explodey, but there are some significant things that are happening that we should probably cover. Maybe let's start in the Middle East, and I'll just try to give a broad overview of what happened in the Middle East this week, and then Rob, I'll sort of rely on you to pepper me with comments, and we can go, or with questions, and we can go back and forth. So the week, if you've been a regular podcast listener, the week started off very badly. 3 U.S. soldiers died in an unmanned aerial drone attack by Iran-backed militias in Iraq and Syria on U.S. forces stationed in Jordan. So there was this fear that, maybe the Biden administration is really going to have to retaliate in such a way where we could get that regional escalation that everybody has been afraid of. In the end, it looks like Iran, like the United States, does not want a broader regional war, because the group that made the attack came out the next day and said, we're not attacking the U.S. anymore. Our bad. Please don't bomb us to smithereens. And so the United States has struck back, but not in sort of a meaningful way. The Houthis continue to do their thing in the Red Sea. They haven't succeeded at hitting anything, but they are certainly trying. The United States had to shoot down a drone off of Yemen's coast on Thursday. There are apparently unmanned vessels laden with explosives, just floating around in the Red Sea, hoping to find a ship that they crash into to explode. The Houthis have been firing off anti-ship missiles, and the United States is not able to get them to stop. And Iran apparently doesn't want them to stop either, or is not able to get them to stop. So all the Red Sea shipping disruptions are there. You have shipping executives coming out and saying, we don't know if it's going to take 1 month, 3 months, 5 months. I mean, that might as well be 12 months at that point if you're thinking that far ahead. And then, the other thing that happened was Aramco, in a very terse and dry announcement, said that it had received a directive from the Saudi Arabian Ministry of Energy to maintain maximum sustainable capacity for oil production at 12 million barrels per day and not to move to 13 million barrels per day. And the terseness of that press release was not matched by the sort of fanfare that the Saudi government had said, hey, from now until 2027, we're going to do everything we can to get another million barrels of oil per day on the market. And that has been sort of rippling throughout markets in general. And then maybe we can talk about the sort of the U.S. LNG export decision as well in the context of that. But maybe let's just pause there, because there's a lot to, and I guess the last thing I should say is there are some rumors about an Israel-Gaza ceasefire. We can pick those apart if you want. But sort of that's the picture of the Middle East as we're sitting here recording on Friday, February 2nd. So what parts of that do you want to tackle, Rob?
Why don't we start with the latter and then move backwards? Because oil prices went down about $4 a barrel when rumors came out about a potential ceasefire. What do you make of that? Is that a high probability event? What are the incentives involved?
It's a difficult question. So, and the reporting we have is not super firm. So apparently Qatar has been negotiating with Hamas, and Hamas is, most of the reports are saying, is open to a ceasefire deal. And it's a 3-part deal where there's a certain number of hostages get released in return for a larger number of Palestinian prisoners in phase 1. And then there's an end to fighting for X number of days, and a lot of humanitarian convoys are allowed to come in Gaza. There's a further prisoner exchange and hostage exchange in round 2, and then 3. It's hard to imagine we even get to 3, but further down the line we start talking about recognition for a Palestinian state and things like that. Netanyahu has been pretty staunchly against giving up any Palestinian prisoners beyond those that he's already given up, and he has personal reasons to keep the war going for a while now. Israel's strategy in the war has not made much sense to me unless you're trying to prolong the conflict. I hate saying that, and I hate being that cynical, but I don't understand what Israel is doing unless you're trying to prolong the conflict, because they haven't been prioritizing getting the hostages home. There are no achievable military objectives that they've articulated inside of Gaza, and they seem to not be willing to go after Hezbollah. Either not willing, or they've been told by allies that they're not going to go after Hezbollah. So everything I know about Netanyahu and all the ways that he's behaved since October 7th suggests that this sort of compromise deal would be a non-starter. Now, maybe he's getting enough domestic political pressure to just stop with the war and get the hostages home. Like, maybe that political pressure is starting to move him a little bit, and maybe the Israeli defense establishment is recognizing that they've trapped themselves in a conflict that they can't win with no achievable objectives, so maybe they're also pushing him in that direction. But I'd say it's a little bit too early to be thinking that a ceasefire is imminent, and even if there is a ceasefire, that it's going to hold. Another thing that sort of happened in the context of all of this is that Thomas Friedman put out an op-ed this week, and it's not often that Thomas Friedman op-eds are worth anything or tell you anything about what's actually going on in the world. I don't know if you saw this op-ed, but he talked about a new Biden doctrine, and the Biden doctrine is 3-pronged. It's about a resolute, strong stance against Iran, whatever the hell that means. Close to, not immediate, but imminent Palestinian state, a demilitarized Palestinian state, and then a deepening of the U.S.-Saudi defense and security relationship alongside normalization of ties between Saudi Arabia and Israel. Now, the reason I'm even talking about Thomas Friedman is because Biden loves to leak shit to the op-ed writers of the major papers. So when you get sort of, David Ignatius in the Post talking about we don't want a Cold War with China, or you get a Tom Friedman coming out with something that doesn't look like just blowhard opinions, but actual, I have reporting that this is what's being considered the Biden doctrine, like that's Biden trying to float a balloon to see, is this going to land? This is kind of where the direction of policy is going. So that does tell you that maybe the United States is pushing for some kind of ceasefire, some kind of resolution in the background. As an aside, I don't understand why every single president thinks that the end of their term is the time to try and just bring peace to the Middle East. It's laughable that Biden is going to be the next one who, oh no, I got the plan right this time, and the war is the perfect opportunity to do this. So you can hear that I'm skeptical. I wouldn't dismiss it, and maybe they'll try for a little bit just because of the war fatigue, but I don't see any reason to think that there's a ceasefire imminent. But even if there is, that's not important. What the important thing here is both the U.S. and Iran don't want a regional war. And both sides, the United States is putting pressure on Israel, and Iran is obviously putting pressure on some of its proxies to say, hey, there are red lines here, don't go past them. We don't want a regional conflagration. And as long as, I don't want to call them the adults in the room because they don't behave like adults, but as long as the regional powers and the bigger powers don't want to fight with each other and are trying to push against the smaller countries or the militant groups and things like that, then we're talking about an Israeli-Palestinian conflict that really doesn't matter that much. And yes, the Houthis is related to the Israeli-Palestinian conflict, but the Houthis are using that as an excuse to fire off missiles in the Red Sea. But that's the U.S. and Iran and multipolar and global shipping and everything else. The Israeli-Palestinian conflict has relatively little to do with that beyond a rhetorical excuse for what the Houthis are doing.
So it sounds like, based on what you're saying, that you think it's unlikely that things spiral. That you think if Iran does not want a conflict and the U.S. does not want a conflict, that they can successfully clamp things down enough where it'll settle down. Am I reading that correctly?
Well, it depends also what we mean by spiral. In some ways, it has spiraled to a certain degree. The fact that we have all these shipping disruptions in the Red Sea, that is spiraling. It's not state-on-state conflict. So I think the real nightmare scenario that people were imagining was, oh my God, we're going to have state-on-state conflict in the Middle East, and some of these powers have alliances with other great powers in other parts of the world. So could this be a World War I type domino scenario where, okay, Russia and China are backing Iran, and the United States is backing Israel, and Turkey's backing whoever they want to back, depending on what their interests are that day? Are we starting to get into that kind of scary situation? That's not there. And I mean, the risk for that is not zero. Anytime you have active conflicts in a region that is this volatile, it only takes one errant missile or one drone strike in Jordan to change sort of the logic on the ground. But there isn't spiraling out of control in that sense that any state here wants a war, is ready to fight another country for a war. What we have seen is that all of these militants and proxy groups and things like that, they feel the power vacuum, and they feel that nobody wants to rein them in or have this kind of thing. So they're expressing themselves the way that they know how. They're firing off missiles, they're taking territory, they're fighting off against anybody else who's trying to oppose what their interests are. So we've seen it spiral out of control, and every single day that the United States has not restored safe shipping in the Red Sea is further spiraling from my point of view. I've said this a couple times, I'll say it again. I think we will look back at January, February 2024 as, when multipolarity actually began. We've been talking about it, and you can read the tea leaves and the data. Now it's happening. Now things can't get from point A to point B because some Yemeni militants are firing anti-ship missiles, and the much vaunted U.S. Navy can't stop them. That's a remarkable sentence. You can't even imagine saying that sentence 12 months ago. So anyway, you asked if I think there's no potential for spiraling out of control. Depending on your definition of spiraled, it's already spiraled, but you're right that I don't think we're headed towards that World War III state-on-state actor kind of conflict, but that shouldn't make you any more sanguine about shipping prospects in the Red Sea or the risk of shipping disruptions in the Persian Gulf or the potential for attacks on Saudi oil infrastructure. If you rewind a couple years ago, that's what the Yemeni militants were aiming at. So all of that is still on the board. So
let's talk a little bit about oil specifically, because a few things catch my eye. The first is that despite all of the news in the last few weeks, I'm sorry, in the last week, and especially the ceasefire rumors that knocked oil prices down $4 a barrel, oil in West Texas is still trading at $74. And that's pretty remarkable. The background to that also is, on the Saudi news, they came out, as you pointed out, and they said that they were going to reduce their target, which I don't think they had really hit, except for once, very briefly, but it was an aspiration more than an actual amount that was being produced. Just to clarify that for the audience. But if you look at the other members of OPEC, total OPEC production has been down in part because of Saudi, reducing its own production, and because in Libya, production had fallen for reasons that they could not control because of conflict and issues like that. But at the same time, almost every other OPEC member was cheating. Iraq was producing above its quota. The UAE was producing above its quota. And I bring this up not to get into the minutia of oil production and consumption so much as to ask the question, how do the incentives work for OPEC members, for example? Because if I'm a member of OPEC, I want people to be afraid that Middle Eastern regional conflict is about to break out. I'm hoping that I'm not going to be involved in it, but that's good for me. It's good for business. And it's even better if, some guy over there has his oil production curtailed because there's some problem going on, and that sends prices up and I can take advantage of it. It's a form of cheating almost. So that's a little bit off the wall, but how do you think about that from the standpoint of an Iran, from the standpoint of even on Iraq, any of these regional players? How does that impact sort of oil production and that dynamic where, OPEC is by definition a cartel, depends on discipline and it depends on stability. And when things kind of go off the rails, it's that much harder to enforce those things.
Yeah, back in my GPF days, I wrote a column, the title of which was OPEC, a prisoner's dilemma. And that's what OPEC is. It is a prisoner's dilemma where if everybody does the same thing, yes, OPEC has power. But as soon as OPEC announces that this is going to be the production quota so that we can control the price, you always have countries that don't follow the quota, who try to increase their market share, who are willing to take lower prices for their oil in return for maybe elbowing out some of their other fellow OPEC states. And the other thing here is that, Saudi Arabia has been the de facto leader of OPEC for a long time. And everybody wants to go at the leader. Nobody wants to just follow what Saudi Arabia is saying. And a lot of these countries, they're not like Saudi Arabia. They don't have the massive cheap oil reserves that Saudi Arabia does, but there's been a lot of investment. They can produce it more easily now. There's reason for them to sort of push back against it. And then you zoom out even more, and OPEC is still a significant player. I forget what the exact percentage is, but if you look at where OPEC was in terms of global oil production in the 70s versus today, I think it's gone from something like, I want to say like 42, 43% down to the low 30s. I'd have to go find the exact data. So like OPEC's still a major player, but the edge has declined a little bit. And depending, OPEC says that edge isn't going to decline anymore, that it's going to increase. If you look at other, reports from like the IEA and places like that, they actually say that actually OPEC's edge is going to continue to decrease. But just that stepwise reduction in their influence also creates more possibilities for the prisoner's dilemma, for one to do something that the other doesn't particularly want to do. So that's sort of the internal politics of OPEC. I keep on coming back to the fact that it just seems to me like there's too much oil supply on the market in general. And that was not true in the 1970s when we had the real, as a result of the 1973 war between Israel and Egypt and everything else that happened around then, you had that massive spike in oil. But that was happening around the same time that U.S. production was beginning to flatline and even decrease, even as growth and consumption was increasing. It was a very, very different world. But now we're in a world where the U.S. is the top oil producer. And even though everybody keeps sounding the death knell for U.S. oil production, the U.S. keeps producing more. And throw a dart at the board, and everywhere around the world, you've got more countries, whether it's Argentina in shale, or Brazil, or Guyana, or Angola, or you start looking around the world, all these countries are talking about increasing oil production, not least because they saw the jump in oil prices over the last 18 months, where oil went from left to dead to into the close to 100, if not over 100, and now we're hanging out 70 to 80 is sort of a nice place to be from that point of view. So all of that is to say, I think OPEC and Saudi Arabia in particular have a difficult needle to thread here, because I think there is too much supply, and every time OPEC tries to reduce supply, they can't actually control the market, because they can't even control their own members, let alone these non-OPEC states that are doing things on their own. So, I mean, that's some of my explanation for why you're continuing to see oil stuck where it is in its current range, despite the fact that we, in some ways, have the nightmare scenario for oil, like Middle East war and shipping disruptions in and around the Red Sea. Like, you would think that was going to send prices up for oil, but oil keeps shrugging. And I guess the place that I'm coming to here is, if oil is going to shrug at this, I mean, what's it going to do when Argentina shale truly is online, and when Guyana has been pumping for 2 or 3 years? Like, maybe we'll get some more spikes here on shipping disruptions in the next couple of years, but the long-term picture is of more supply. And from that point of view, it makes sense that Saudi Arabia doesn't want to be out there trumpeting that they're going to put another 1 million barrels of oil per day on the market by 2027. I rambled a bit, but the last thing I would just say, I saw this from the guys at Gavakal, who are great to follow if you care about the Chinese economy. They noticed that Chinese imports of fuel from Malaysia increased by some ungodly percentage, like triple digits. And they basically were suggesting that that's how Iranian oil is making its way into the Chinese market, that it's coming through Malaysia. And if you want a statistic for how much oil China's importing from Iran, that's a good proxy for it. And it seems to be a fairly large number. So Iran has been quietly increasing production, and it's selling to China, anybody else who will take their barrel. So you throw that on top of everything else, and it's hard to get reliable data on Iran, because nobody wants to say that they're importing from Iran, because then they're open to U.S. sanctions and all of the public relations problems that come with that. So, and Iran is a major producer in its own right. So maybe quietly Iran is also increasing production and is trying to refill its state coffers with exporting oil at current prices too. So that you asked about OPEC. That's a long-winded way of saying OPEC is not what it was in the 1970s. It's still tremendously powerful. It can still shape markets, but even within OPEC, it's always been a sort of prisoner's dilemma, where one looks at what the other is doing and tries to take advantage of even what OPEC says it's doing.
Yeah, it's an interesting dynamic between demand, which is currently somewhat depressed, and supply, which has been just incredibly resilient, as you point out, both within OPEC itself, as usual, but also in the U.S. And I mean, people have been calling for U.S. oil production decline for the last 2 years, and the same for gas, and it just hasn't happened, which is testament to how productive oil majors in the U.S. have become. This is an efficiency thing. It's not that they're spending a ton of capex on drilling new wells. It's that production per well and the efficiency with which they can drill has really gone up so dramatically. The thing that catches my eye, and maybe this is a meaningless data point, is you would expect energy in that case to be doing really bad. Not energy prices, but energy equities. And, we mentioned this, what was the biggest thing that no one's paying attention to, or the story no one talks about? It's the fact that if you go back to the height of COVID, since the height of COVID, energy has outperformed semiconductors. And everyone, I don't think anyone, unless they actually had the chart in front of them, would believe that. And that, to me, is a very striking thing. How can that be? How is that possible? What does it tell us about the future of U.S. or global energy supermajors and pricing? Is this about efficiency? Is it about an outlook on oil's just going to remain high no matter what happens? I genuinely don't know, but it's something that I think about a lot. And it's one of the reasons why looking at charts in front of your face tends to be a good thing because it opens up different ideas. But I don't know. I don't have a thesis for this one.
Yeah, I mean, we can do a little blue sky thinking there. There are two things that come to mind. The first is for all the greenwashing, people still consume oil. Like it's still one of the primary energy sources in the world, and it's not going anywhere, especially in emerging and developing markets. And these are places that have not been necessarily doing as well as the United States, that have been really hit by higher food prices and things like that. But when you look at where growth is going to happen, and when you see really high growth rates in places like India or Pakistan or in parts of sub-Saharan Africa and things like that, like there's going to be growth. There's going to be increased demand for oil from these places. Now, whether these places can pay for it and pay the prices for it and whether they're stable enough to import, those are all sort of different questions. But from a demand perspective, like the world is still growing and urbanization continues to increase in these emerging and developing markets and parts of the world. And those places don't have a lot of the oil that we're talking about. The oil is, as we said, it's in Argentina, it's in Brazil, it's in Guyana, it's in the US. It's not in these places that are looking to grow in meaningful ways. It's not in China. And China, even if growth there has flatlined, and even if it's deflation, and even if it's a property crisis, even if all the worst fears came true with China, even if the treadmill blew up in their faces, we still have hundreds of millions of Chinese people living in the interior of the country who are basically peasants. So imagine if they, get a stepwise increase in their incomes or they join the rest of the Chinese economy. There's a bunch of sort of demand sitting right there. So I guess that's the first thing. The second thing is I wonder if energy security has something to do with this, because in a world where we're not just talking about energy markets and price, but we're also talking about different countries wanting to ensure energy security, suddenly energy companies become what they were before the unipolar era, which is also, they're directly tied to geopolitical strength. And it's in the interest of the US and of Saudi Arabia and of all of these different countries for their energy companies to be healthy and not to be, suffering or full of debt or having no prospects for investment in the future. Because the only way we get to higher oil prices, to me, seems to be if these companies say it's not worth it for us to do the capex and investing in production in the future, so we're just going to sit tight and distribute our current profits to our shareholders, and eventually the market will get unbalanced, and then we'll start drilling again and we'll sort of enjoy ourselves. And it seems to me that you have public interest in energy companies doing well, which again, that doesn't sort of line up with the narrative of climate change and green energy and all those other things. But if you're thinking about this from a national security perspective and you have energy companies, you want them to be strong. And I wonder if some of the shifting of supply chains and some of the public-private partnerships that are happening behind this, I wonder if that has something to do with it. But you're right. I mean, we've been sort of casting about for theories here for, I don't know, the last 12 months. I mean, energy and oil in particular has not done what we thought it was going to do. So I'm with you there.
What about gas? I want to get your view on the LNG export pause, because it is somewhat related on the topic that you're talking about.
Yeah, so let's talk about that for a second. So what happened this week was that the Biden administration decided to freeze consideration of new natural gas export facilities. So we're not even at the point of restricting natural gas exports. But if you're building one of these facilities or you're thinking about building one of these facilities so that you can export abroad, suddenly that's a lot riskier of a proposition. And the Department of Energy is going to, quote unquote, review the long-term implication of the facilities based on climate change and ultimately decide if they serve the public interest. Now, I've been here for a while on an island banging on the table saying I think the biggest risk, at least in U.S. natural gas markets, is that the United States is going to step in like it did with oil in the 1970s, that the U.S. government will step in and say, okay, we're not going to export this so that you, Rob, and France can have cheaper energy. I mean, France is a bad example because you have nuclear reactors, at least when you're servicing them correctly and they're not under maintenance. But you're not going to find a U.S. president who's going to be cool with exporting U.S. natural gas to Europe to get cheaper gas for the Europeans while gas prices start to increase in the United States. For as much as energy costs have increased in the United States over the last 5-10 years, the U.S. has super cheap energy prices relative to just about anywhere else in the developed world, and that's all because there's plentiful natural gas. So maybe the Biden administration believes some of this thing about, oh, we have to review the export facilities because of climate change. I think that's an excuse. I think they see the writing on the wall that if they keep on exporting at the current clip, it's going to increase the price of energy for U.S. consumers. And if you're going into an election year, that's exactly what you don't want. So you probably want to telegraph, hey, we're not going to be exporting more, and maybe you'll get lower energy prices, at least in terms of natural gas. And that's a good thing to have coming into an election. The less cynical thing was, and this is what I would pair this story with, it's what I paired it with in the SITREP, was the White House is also talking about loaning $1.5 billion to a privately owned company called Holtec International Corp. To restart a nuclear plant in Michigan. And you already mentioned Chase once on the podcast. We'll have him back soon. Here's another place to mention him, because I've been sort of down on U.S. nuclear, and he sent me a note a couple months ago now that said, hey, you're a little bit too down. I think there are things that might happen that might change things. Well, here's something. If the Biden administration is going to say, all right, we're going to restrict natural gas exports, and we're going to start putting billions of dollars to work so that U.S. nuclear capacity comes back online, now we're in a very interesting world, and in a world where the United States is embracing nuclear, which is, to me, is if you put aside all of the psychobabble and the constraints around it and the culture around it, like, nuclear makes the most sense. It's the cleanest and the safest and like everything else. So it's interesting to put those two things together. But the last thing I'll say, because I don't think I deserve too much of a victory lap here, because one of my highest conviction things at the end of the year going into this year was that I thought natural gas prices, at least globally, were going to rise. I didn't think we were going to get a repeat of the super warm winter that we had in Europe. You add in maybe a cold snap in Asia, a reversion to the mean in U.S. natural gas prices. Like, I really thought U.S. natural gas prices in particular, but natural gas prices in the world in general, were primed to go up. And they haven't. They've gone down. We got stopped out of that trade. So even as we read some of the tea leaves in these broader moves, as you like to say, Mr. Market is telling us right now that natural gas prices are going lower. So I don't know, maybe they'll spike in the next month or two, and they'll prove us right, at least from the big picture in the long term. But natural gas has also not behaved the way that I thought it would, because you remember last year we got natural gas right because everybody was freaking out that prices were too high, and we said, no, there's enough supply, everything's going to be fine. I wasn't expecting the complete inverse, but I was expecting a little bit more of a reversion to the mean. And it just hasn't happened. So in the same way that we're casting about for answers on oil, we're also casting about a little bit for answers on natural gas. But at least there's some food for thought there.
That's one thing I don't understand about the Biden pause on LNG permitting, is if indeed they're doing it as an economic sop to households, like in the 1970s with oil prices, when the price of gasoline was an enormous national issue. Why aren't they framing it that way? Why are they framing it as an environmental or a climate change related thing? Because, like, doesn't that leave them open to political attacks of, well, look at them curtailing U.S. enterprise, these tree hugging, pansies? Like, do they get any credit for that if that's actually what they're trying to accomplish with this? You understand what I'm getting at?
I do. There's nothing about Biden's PR team that makes me think that they're particularly good at PR, first of all. So there's that explanation. The second thing, and I don't know this for sure, but I would guess that it's, you open yourself up to less legal recrimination if you make it a climate change issue than if you're just saying, hey, we want to keep, we're restricting exports because we want to keep energy prices lower. Like, there are laws on the books to do that with oil. There's not laws on the books right now to do that with natural gas. I was talking to a friend here in New Orleans about this week. You would probably have to have new legislation to give the president the power to actually do that. And the idea of getting anything through this Congress is laughable. So maybe Biden is casting about for, but if we use the Department of Energy and climate can change or climate change considerations are really environmental considerations, means that we have to slow roll some of these things. Like, it probably has something to do with the legal authority they are casting about for some way to pause things without opening himself directly to such legal. But again, I'm just guessing there. Those would be my guesses for why he's going that route.
Well, on the nuclear stuff, yet another feather in the hat of the French. Just going to throw that out there. They seem to be doing well.
Well, it should be a feather in the hat of the French. But as we saw last summer when, they were having to import LNG because the nuclear reactors weren't online at the right time, I'd be careful before saying Vive la France on that one too much. Before we go, because I have to get out of here in about 10 minutes, I think and there are other things we wanted to cover today that we're not going to get to. There were Philippines, things in Indonesia, Nigeria. We're just going to have to leave them until next week, or you can sign up for the SITREP if you want to get some of the breakdowns. But I think the other thing, the big thing that happened this week was the conflict between Ukrainian President Volodymyr Zelensky and his top general, Valery Zaluzhny. I hope I got all those pronunciations right. I think I did. If you speak fast enough when you're speaking Russian, it sounds like you've got it 100%. So I just rammed right through that. Has finally come to a boil. So there are reports that Zelensky tried to fire Zaluzhny on Monday and put him into a different role in some kind of security council. He said no. Then Zelensky's office denied that they had fired him in the first place. But this started back in October, November when Zaluzhny was out there contradicting Zelensky in some ways, talking about the failed counteroffensive. So some disturbing things at the top level politically for Ukraine. You juxtapose that, though, with the European Union decided to push through a 50 billion euro aid package for Ukraine, and it got Viktor Orban in Hungary to really wave the white flag on against this aid package pretty easily. Orban and Hungary had been holding it up for a long time, and you had the EU telegraphing, well, hey, if they continue to block this, we're going to use Article 7. We're going to suspend their right to vote on EU decisions and things like that. And suddenly, Orban didn't object to it at the meeting this week, and now it's on the book. So, it's 15 billion euros between 2024 and 2027, so it's not going to make a huge difference. It's also, you can't fire euros at the Russians. They need ammunition shells. Like we've talked about all of the problems that the Ukrainians are facing and how EU support has not been what you thought. But it was pretty interesting that Hungary just went along. Politico had a long report about how it was Meloni from Italy and Macron from France did a charm offensive with Orban, and they made him feel warm and fuzzy, and that was why he blocked that was why he rescinded his veto on the bill. Orban himself said that Hungary gets to review where some of the money goes, so that satisfies all of their qualms and things like that. But a rare sign of European unity as the Europeans say, nope, we really do care that Ukraine is going to win, and we're going to support them with our billions of euros going forward. But the question is, what kind of Ukraine are they going to support, and who do you call when you want to get to Ukraine? Is Zelensky even going to be in control in 6 months? Is it going to be Zaluzhny? Is it going to be something else? So I continue to be more worried about Ukraine than I have been at any other point in the war, save maybe that first month. Things are not looking particularly good at the top levels of the Ukrainian government. Bummer. God, I just took Rob's breath away with that. Anything else, Rob, on your mind before we close and say goodbye to the listeners?
No, I don't think so. I think the list that you put of other things we can cover in the SITREP, but there certainly is a lot going on. So plenty to talk about.
I'm surprised. I'm proud of you for not making fun of me once during the entire podcast about having to go to Miami to speak at a tissue conference this week, because everybody's making fun of when they hear I'm going to Tissue World Miami. They're like, oh, like tissues? But paper is big money business. Like it's actually a really big deal. See, now he's laughing. It's a really big deal.
I was talking to someone yesterday and they were like, you mean like tissues, like human tissues? I said, no, like the Kleenex kind.
Yeah, so. and paper towels and toilet paper and all that other stuff. Like everybody uses this stuff,
Oh, I didn't realize paper towels were included. I thought this was just purely tissues. Oh, well, paper towels, that's a big deal.
Okay, so if it was the paper towel conference in Miami, then it would be okay. But tissue Miami, that's anyway. The one thing I'll say about, I doubt many people from the tissue conference are listening, but the one thing that's interesting about that industry relative to others is that it's always been a bit more locally based. So when I put up maps about, where imports and exports are right now and where they might go in a multipolar world, it's usually a really easy story to tell, because right now everybody imports from China, and everybody exports to China. Almost whatever industry you're in, that's like sort of what the broad macro story is. It's not like that for tissues. I mean, it's Brazil and Indonesia and Turkey and Italy, like major production centers servicing more local areas. So they have their own problems in terms of shipping disruptions, especially energy. It's an energy intensive process when you get into paper and how that's working. But it is interesting that that's one business that is a little more sort of locally based. And you would expect that more for food, right? But food is not. Food is still at that macro level, built for a unipolar world, whereas the paper goods and tissue industry seems to be built for a multipolar world. So there you go. There's even something interesting in toilet paper. And next time I'll lead with paper towels. You'll take me more seriously. Thank you so much for listening to the Cognitive Dissidence podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there. The views expressed in this commentary are subject to change based on market and other conditions. This podcast may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. Cognitive Investments LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Cognitive and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.cognitive.investments. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor.